All right, everybody, welcome to our webinar. This is about the current market trends. We're going to answer 4 of the most common questions. My name is Jimmy Glenn, and I am the head of marketing here at Homeland. Just some quick housekeeping. Everyone will be on mute. We're going to be taking the questions and answer the Q&A portion of the Zoom. So if you familiarize yourself with that real quick, and you can go in there and type in your questions. We are recording this session, so if you need to refer back to it, if you get disconnected for any reason, we will be able to post that on our YouTube and on our website. And I think with that said, we are ready to get going. I'm going to introduce Rick Borgo.
Hey, Jimmy, happy to be here.
Rick is one of the mortgage bankers here, and he is a expert in the field. So Rick will be talking us through sort of what's going on in the market right now and how we can navigate sort of a very competitive market in 2022. Please note, obviously, everybody's individual situation is unique. So what we're going to be talking about today is very general in nature, but from a financial perspective, it's really important that, when you are discussing mortgages, when you're discussing any sort of major financial decision, that you speak to an expert and really look at your, your debts, your income. There's a lot that goes into, mortgage rates, mortgages, and, home buying. So be sure to talk to someone one-to-one. This is really purely for the kind of a more general audience. So that being said, let's get started. So real quick about Homeland, we are, our parent company is Quick Mortgage. We were founded in 1998. In 2015, we were established as Homeland Mortgage, which is our direct-to-consumer line of business. What that means is we work directly with you. There's no middleman. You can find us on Bankrate, Zillow, a number of other sites, and you'll talk to someone like Rick and be able to figure out your mortgage on your own. In 2021, we were named one of Inc. 5000's fastest growing companies, which we're very, very proud of. Over the past 5 years, Homeland has helped 10,000 plus families. We've funded over $4 billion in loans, and we have thousands and thousands of 5-star reviews on Zillow, Bankrate, Google, and other sites just like that. So real quick, we are going to do a poll. This will help us get a feel for kind of who's in the room and figure out sort of what kind of properties you're in the market for. So let's get that going now. I'm going to give it a couple more seconds. For the 3 or 4 that haven't voted yet, you have a few seconds left.
All right, Jim. So it looks like we have almost a split decision here. People are mostly either shopping for their primary residence, which we do see a lot, and then investment properties, which makes sense. It looks like we're getting a little 50-50 result here. Just a couple quick things to note. Primary residence, obviously, that's the home that you're living in, you're occupying. You're only allowed to have one of those, same with a second home, whereas investment properties, you could have multiple. One quick thing, primary residence, minimum down payments for these things, as low as 3%, usually 5% down payment you could get into a home. Investment properties, you're going to be usually minimum 15%. That's for a 1-unit investment. When you start getting a couple more units, you go 25%. But just to give you some bare bones on those 2 types of residences.
Great, thank you, Rick. All right, so up next, we are going to get into the meat of the presentation here. So Rick, what's the current state of the market?
Yeah, so if you turn on any news channel, I'm sure you have heard about rising rates and low inventory in real estate. What I could tell you, rates are rising. That's a fact. Last week, we had the Federal Reserve, they increased the federal funds rate by 50 basis points for the first time since the year 2000. So it's been 22 years since the federal funds rate was hiked, 50 basis points. What does that tell you? Federal funds rate and mortgage rates, those are positively correlated, meaning, they kind of move together. This was the first rate hike of the year, but from what we've been hearing from Jerome Powell, we expect, it could be anywhere from 6 to 8 more rate hikes throughout the rest of 2022. And, we would assume, most experts in the field are assuming that mortgage rates are going to continue to increase as we go through the end of 2022 here. So mortgage rates are rising, that's a fact. Inventory is low. We're going to talk a little bit more about that on the next couple slides. Same with home prices increasing. As you have more demand and less supply, home prices will be higher. That goes for groceries, real estate, any industry you could think of. And the market's very competitive. As little supply means that supply that is there is going to be competitive when you have a high demand for things. So that we could assume, with a low supply and high demand. So why is the inventory so low? It's a great question. You've been hearing a lot. I know if you tune into CNBC, you hear it every day. But to give you an overall picture, it's the inventory is low because of COVID-19, the pandemic. A couple things caused it: labor shortages, supply chain restrictions. Those two things. Overall labor shortages, they cause supply chain chokeholds in almost every industry, including real estate. And when this happens, the prices for material and labor both increase, which is a cost that is ultimately passed along to the buyer. You also have some general market uncertainty. The pandemic, inflation, an overall sentiment of uncertainty, thanks to the inflation, has caused some people who are originally thinking of selling their homes, they may not. They may stay, which causes a little bit of a less supply. So like we said, that little supply is going to cause each home to be a little bit more competitive. And we're seeing migration. Any extra homes that would normally be available in, suburban America, those are getting gobbled up by high wage earners from big cities. People are making the move from big cities, whether they're renting or owning in places like New York, Chicago, Los Angeles. There's less square footage there. So with this work from home movement, we're seeing a lot of these city residents move into the suburbs and cause more demand there. So I think those three things are all caused. I think you could point back to the pandemic overall as kind of like an overarching reason for the low inventory that we're seeing.
That's great. And as you talk about different cities and different things, looking over the attendee list, we have people from pretty much across the country. I saw Texas, California, Georgia.
Right.
So we've got people here that are kind of experienced in that probably all over the country.
Sure. And what we're seeing here, this graph, home price appreciation year over year by month. You could see, standard home appreciation you would expect between 3 to 5% per year. You could kind of see in between December 19 and December 2020. When we start hearing about COVID and ultimately the pandemic takes effect, you can see that the home price appreciation starts to increase. That's again because higher prices for homes caused by more demand and less supply. This graph, it could be a little bit confusing to the naked eye. It's not necessarily saying that home prices are increasing here through 2021 and then Fannie Mae projects home prices to come down. That's not what it's saying. It's saying that in December of 2022, Fannie Mae expects a 10.8% increase in home price compared to December of 2021. So I don't want any of our viewers to get confused by the way that graph looks. Home prices are projected to continue to appreciate. It looks like almost 11% through this year, and then Fannie Mae is projecting more back to our standard 3 to 5%. In 2023. And one other thing I want to note, because if you go on YouTube, you hear about these real estate bubbles and the housing bubbles similar to 2008. I think we're in a little bit different of a market, Jim. Back in 2008, qualifications for getting loans was a little bit looser. Since the 2008 recession and the housing market bust there, it's been much stricter to get a loan. Higher credit scores, lower debt to income ratios, that type of thing. So when people are trying to compare this, time in real estate to 2008, I don't think that's necessarily accurate. I do not foresee any sort of, real estate bubble or quote unquote housing crash. I think we're just in a little bit of a different time here.
That's great info. All right, so we're going to do another live poll real quick. What stage of the home buying process best describes you? So we're going to get this going right now. This again will help us kind of get a better idea of who's in the room.
Yeah, Jim. So I see some votes starting to come in here. So basically, we have this separated into 4 different stages. What I would do, I would group, those top 2 stages together. Researching options, buying in a couple months. I would group those 2 in together, and I think you need to ask yourself, what exactly are you researching? Some people, are you just, trolling Zillow, looking for homes, seeing, what kind of kitchens you like? Or are you actually looking at your finances, knowing what you could afford in terms of a monthly payment? How much money do you have saved for a down payment, closing costs? Are you considering those? Are you looking for a home, a condo, a work from home space? I think these are all real important questions that you should be asking yourself if you are in one of those 2 stages. Some people, are buying in 2 to 6 months. Is this because you're trying to time the market? I wouldn't suggest trying to time the market. We'll show you a slide, maybe the next slide, where the cost of waiting, it's definitely there. So what I would tell you, if you are in one of those first 2 stages, there's no harm in working with a mortgage banker to get pre-approved, even if you are 6 months, 12 months out from purchasing. It's just a good decision to have an expert look over your credit report, tell you how much you could afford. Come up with some creative ideas and loan products that may be able to, fit your specific scenario. Going to that 3rd section, I see we have a couple people there, found a home. So at this point, most realtors want you to be pre-approved before they take you to even see a home. So I don't know if, maybe someone found a home on Zillow, or if you did make an offer, I would imagine you've been pre-approved to that point. So, I would tell you, reach out to a mortgage banker, understand what you could do to make your offer a little bit more competitive. There's different creative ways to do it. And it takes an expert to look at these things and kind of give you some ideas, especially in this type of market. Signed purchase agreement, you're obviously much further along in the stage. Your focus should be on the lender. Are you actively discussing interest rates? Are you getting quotes every day depending on market movement? You should know what they charge in terms of lender fees, origination charges. You should ask them for a loan estimate, a 3-page document, standard in the lending industry. And you just see how they, how responsive they are, how their customer service is. Because that is important. You're going to be tied to that lender for, 30, 45, as many as 120 days out. And I think it's just important that you build that rapport and you feel comfortable working with someone, on the biggest purchase of your life in most cases.
So as we were talking, this market's really competitive. I know that there's probably a lot of people have sort of the kind of wait and see thought process. We're seeing that home prices, per the previous slides, are saying that things might go up. So Rick, let's talk it through. Should people wait to buy?
Yeah, so waiting to buy, you never suggest it. You never want to see anybody do it because you really cannot time the market. This graph here, you can take a look, a 5% interest rate, a purchase price of $500,000, 20% down payment. It gives you a monthly principal, a monthly payment of about $2,150. But in 6 months, 12 months down the road, we are expecting interest rates to rise. Does it go to 5.5%? Does it go to 6%? And on top of that, not only are you going to be paying a higher interest rate, more interest, you may be paying more for the actual home due to appreciation. Is the $500,000 home now worth $530,000, $550,000? We've all seen it. Every homeowner out there knows, their home is appreciated, pretty crazily in these past couple of years. So what I would tell you, you could see the difference in just a 1% increase in rate, standard appreciation. You're paying almost $400 more a month on that monthly payment, and that's a significant amount. And I would say if you are okay paying, that much more, maybe instead of looking for a $500,000 home, maybe you could afford a $600,000 home. So, waiting to buy, timing the market, I don't ever suggest it, but ultimately, what I like to tell people is the rate is going to be the rate when you feel comfortable and you're ready to purchase a home. Every family situation is different. Who's got kids, there's a lot of things that go into that decision. And I just think you have to be wary of trying to time the market. So a couple, in this crazy market, how do you navigate it? How do you compete in a market like this? You want to talk with a lender about down payment options. How are interest rates moving? Interest rates, they really don't fluctuate all that much. Could they fluctuate, an eighth to 1/4% in a couple days? Absolutely. And like you saw on that last page, that last slide, 1/4%, 1/2%, it can make a significant difference in your monthly payment. So I think you got to talk to your mortgage banker. I think you have to talk to your realtor. There's a couple creative ways to make your offer more competitive. Maybe you waive an appraisal. Some people like to waive their inspection. You're making at that point, I would probably try to steer you against, because there is a difference between knowing you're going to overpay for a property, compared to buying a property that is structurally unsound. So I think talk to a realtor, talk to a mortgage banker, get the different opinions, and I think that's the way you should go about it. Really try to understand those things and have them come up with some creative ways for you to be more competitive in the market.
That's great. So I guess sort of the next questions, as we're winding down here is, what differentiates Homeland from, your typical bank or credit union? Do you want to go over, give us some examples here?
Yeah, absolutely. So I know you mentioned it way back in the beginning, and we could say why Homeland until we're blue in the face. But we have I think the number is 2,600 5-star reviews across our online platforms. Go on there, read the reviews. That's the best way to do it. I could sit here, I could tell you, do we have that digital mortgage process? Yes, it's there. You could apply via our secure online portal, connect your financial accounts and upload documents, e-sign the disclosures and forms that are necessary to get you through closing and get your file approved by an underwriter. We do charge low interest rates. We have, the most competitive interest rates out there and no lender fees. We're a direct lender, so we're able to borrow money in bulk at a lower interest rate and pass that savings on to the customer. That's how we do it. Different shops, broker shops, big banks, Chase or Wells Fargo, they're all good options, but you want to speak to somebody who's doing mortgages, 8, 9, 10 hours a day, looking at different scenarios, coming up with some creative options. With our decades of experience, with our loan officers, we'll be able to discuss your pre-approval in detail, specifically to you. And what I would tell you, quick closings. That's really our bread and butter. Usually operating, I would say, an 18 to 22 day timeline. But we close in as little as 7 days, thanks to our in-house underwriting. So that's kind of an overall look at Homeland, what we could do, what differentiates us. But like I say, I like to, defer to the online reviews, because, those are our customers. Those are who we put in our work with, and, they felt it necessary to even go out there and put in a review for us. So that's where I stand with that.
Thanks, Rick. That's great. So we're going to move on to the question portion. Thank you, everybody, for attending. It looks like we have some questions here. So let's take a look. Our first question is, do we charge for interest rate locks? And do most lenders charge for interest rate locks?
Yeah, that's a great question, and that's a common question that we get. Do other lenders? I mean, I can't really speak to other lenders. Some do, some don't. That's the basic of it. Do we charge an interest rate lock, or do we charge for an interest rate lock? Absolutely not. So you could lock in your rate if something were to fall through during the purchase process. You could absolutely pull out of, you're going to pull out of your purchase contract, and we're going to cancel the loan, and that's going to have no burden on you. So to answer that simply, no, we do not charge for an interest rate lock.
That's great. All right. It looks like we have another question. So since you mentioned rates are climbing, is there anything I can do to lower my rate? If so, will I be required to pay points?
Yeah, another good question. So usually you'll be quoted what the lowest rate without paying points. You should be speaking to your mortgage banker, having those those conversations. If you are willing to pay discount points or upfront interest to buy down your interest rate, it's totally possible, very common, but every scenario is different. So I would definitely point you to talk to your mortgage banker. Whether you're working with somebody or you want to reach out to me, I'd definitely be able to help you answer that question. But yes, that's definitely a possibility to pay points to lower your interest rate.
All right, next question. How can I figure out what my closing costs will be?
Yeah, closing costs, great question. I chuckle because they really do vary. They vary on loan size, they vary on state. I could tell you a rule, just a general rule of thumb, assume just a extra 2% of the purchase price in terms of closing costs. I could tell you as Homeland, we don't charge any sort of lender fees. So none of those closing costs will be paid to us. For home purchases, most likely your realtor or your attorney is going to point us to a title company that they're familiar working with. And that's really going to be between those things and then your standard taxes and insurance. Those are going to be the bulk of your closing costs.
Awesome. All right. Next question. I have 2 homes. Is now the time to refinance?
Yeah. Okay. So there's 2 different types of refinances. There's your standard rate and term refinance. That basically just reduces your interest rate. If you have an 8% interest rate today, and we tell you that the interest rates today are closer to 5%, then yes, that would make sense to refinance as part of a rate and term. The second option is a cash out refinance, where you're basically using equity in your home to consolidate some debt. So if you do have equity, you're a homeowner, regardless of where interest rates are, it may be better for you to do a cash out refinance, pay off some of maybe your credit cards, student loans, some of those higher interest debts, and have it consolidated into a 5% or 5.5% interest rate through your mortgage. So that's a good question. It's specific to everyone's scenario, but a very good question.
Awesome. Let's see if we have any other questions coming in. Give it another minute or so. So I am not seeing any other questions coming in. Last call. All right, I think that's it. Well, thank you, everybody. We know that everybody, has a lot going on. So thanks for taking some time and learn more about the current market with us. We will be posting this on Homeland's YouTube and on our website. Also, everyone who's attended today, you'll get an email letting you know when it's posted. That should happen sometime tomorrow. And your mortgage banker that you are working with directly, whether it's Rick or one of our other amazing mortgage bankers, they will be reaching out shortly. So if you have any other questions or anything, don't hesitate to reach out. Thank you very much. Have a good night.